Welcome back on the Pursuit of Wealth, everyone. It's Rod with POW Group, your home for MJ stocks, crypto assets, news, and interviews. Hope you're doing well. It's Thursday, December 4th, and in this video, we're going to take a look at HITI, take a look at the price chart, what to expect there in terms of the technicals and the price action in the days, weeks, months ahead. I'll give my thoughts and opinions, but as always, this is not financial advice. This is for entertainment purposes only, and spoiler alert, we could be seeing a drop down to as low as $1.82. There's a possible bear flag that is forming now, so we'll go over that target and what we need to do to confirm it or negate it. So we'll discuss all of that and more. Before we do, make sure to smash the like. If you're new, you can subscribe, tick the bell, all that good stuff. You'll be notified on any future videos, and follow us over on X as well, formerly Twitter. The handle for that is @GroupPow. So another thing to add to the bearish momentum is we're coming on the end of the year. So typically not great for MJ stocks because they've been performing terribly over the last 4 or 5 years for the most part. So at the end of the year, people may lock in some losses and they might do some tax loss harvesting. So that could basically augment the selling into the end of the year. So that's something to keep in mind as well. But a lot of people are frustrated. There's a lot of things going on behind the scenes, from a fundamental perspective, but we're just not seeing any upside or any price sustained price momentum. And we had the news of High Tide opening their first European Canna Cabana in Berlin. So this was fantastic news. Obviously, they're not going to be selling any MJ products or anything like that right out of the gate, but it is setting the foundation similar to what they did in Canada ahead of Canadian full-blown federal legalization. And I've been saying, I'm on record for a while now, saying no news is bad news. So this is news, but it's not the news we were looking for. It's pertinent and it's specific to High Tide, but we need a sector-wide catalyst, something for not just the Canadian operators, but the whole sector, right? So the only thing, in my opinion, that's going to move the needle, the only thing that's going to be that catalyst big enough to knock this sector out of a bear market and spark a new bull market is going to be rescheduling, because that's going to remove 280E, and you're going to feel the effects for a very, very long time, right? It's going to take a few quarters for even the numbers to start reflecting that 280E punitive tax code that's gone. So it's gonna be a very long-lasting bullish effect, and then that's going to be the first domino in major reform, safe banking, uplisting in the NYSE and the NASDAQ, and then eventually full-blown descheduling in the US and full-blown legalization. So I think that's the catalyst that we need, or better. Hard to imagine what it's going to be, but no news is bad news. And as we've been told, it was going to be a few weeks. It's now been over a few months. We had the post about the endocannabinoid system from the president. So just dangling the carrot. We know the writing is on the wall. It's just on the back burner. And even a member of Congress said that safer banking is on the back burner. And again, I think the reason for that is because they're focusing on crypto. If you look at this new administration, every second word out of their mouth is crypto, blockchain, and AI. Once they're done legislation, which is the Clarity Act, which should be done in the next few months, that's the last piece of legislation that they have, really, and that's the big component of it. And then after that, I think they're going to pivot over to MJ policy. And actually, Michael Burry commented today that the whole stock market is in a huge bubble, and it's probably going to enter a bear market that's going to last many, many years. I agree with that. And he said the healthcare sector is more than likely going to be the only one worth owning during that time. And what have I been saying on this channel for years? I said, I bet you MJ is going to bottom out and start a new bull market around the same time that crypto tops out. And what hasn't been participating in the everything bubble? Pretty much MJ, certain biotech, and healthcare, and psilocybin. So shrooms. So I think healthcare, I would 100% agree with that. I think MJ, the psilocybin market, very correlated as well, and biotech is going to be the place to be over the coming years as we look for tech and a lot of our equities to enter bear markets. So we'll go through the news here before we take a look at the bearish continuation pattern that's on deck. The company becomes the first publicly traded North American MJ operator to set up brick and mortar presence in Europe's largest MJ market. So the retail forward enterprise built to deliver real world value across every component of MJ announced today that it is, and this is an article from December 1st, that has opened its first international Canna Cabana in Berlin, Germany, focused on MJ accessories and consumer lifestyle goods, marking the brand's formal brick-and-mortar entry into both Europe and the German market. So I won't read the whole thing here, but let's go down to the end here. The brick-and-mortar launch demonstrates their commitment to Germany for the long haul. We are closely following legislative and regulatory developments as Germany moves toward broader liberation. Canna Cabana will have a meaningful head start. This is exactly how we built Canada's largest MJ retailer, by establishing a loyal accessories following first, then seamlessly transitioning these customers into MJ retail when the timing is right. Now we're bringing the same winning formula into Europe, said CEO Raj Grover. So like I said, not going to be selling any MJ products. They're starting off with their accessories. They obviously have the acquisition of Ramexi and Pharma as well. So they're very well positioned for this market here as we continue to see more reform in Germany. So that's great news. But like I said, overall, I think the reason it's not moving is because the whole sector is still bearish. We also had Tilray did a 1-for-10 reverse split, joining the likes of Aurora. Pretty much every major name has done a reverse split. Even HITI has done a reverse split. Most people don't know that, so most people only look at today's chart or tomorrow's or yesterday's. But it actually, HITI did a 1-for-15 reverse split back in May of 2021, so even worse than Tilray. And Aurora's done 2, and Canopy's already done a 1-for-10, and they're looking to do a second reverse split. So with that being said, CGC overall, we're not doing too bad. We're sitting at 121, but that dollar and below, you're right into another reverse split territory. So they were given a 12-month period before they had to go back to investors to get additional approval. So they have a full year essentially to decide whether or not they want to do it. I think they will, and that's going to be again a hangover. You're going to feel the negative effects of that and sentiment in the market, and that's only going to hurt High Tide as well because it's part of the sector. So I think that looming over our heads. We have the hemp ban. We have no new safer banking on the back burner. You've got crypto legislation still at the forefront. So I think it's going to be a couple more months of pain. I think we could get rescheduling, but I think it's more than likely they're going to push it into the new year. I think the realistic time frame is somewhere between now and April, where we'll get rescheduling, and then probably safer banking as well ahead of the midterms. But I do think that rescheduling at the very least will be done before the midterms. So this is the bearish continuation pattern that's forming here. So the fact that we lost the weekly uptrend is a red flag. We had our higher low and higher high here on the price action. So we had this higher low here at 315. Once we lost that, we were no longer in a weekly uptrend. Now we haven't confirmed a weekly downtrend yet, so the trend is flat at the moment, but the fact that we lost the weekly uptrend increases the odds of this bearish continuation pattern. If we were in a weekly downtrend, that would even further increase the odds of this playing out, because a bearish continuation pattern obviously is going to have a lot more probability in a bearish trend. We're not in a bearish trend, we're flat, but we're not in a bullish trend either. So it's basically it is still leaning towards this being the most likely scenario, in my opinion, because of the fact that we lost the weekly uptrend. If this was still in a weekly uptrend, then the odds would be favoring continuation to the upside, but now we're favoring continuation to the downside. And based on a lack of resistance here, there's a ton of room for a lower high to form, and then a lower low, a potential weekly downtrend. Also, the EMAs are set to cross bearish here, with the shorter term, the 12 period EMA on the weekly time frame above the 26 period, the longer term. When that happens, it's a bear cross. You can see here it was a bull cross when the shorter term, the yellow, was below the longer term, the white. When the 12 crossed the 26 below it, that's bullish, tons of upside. Crosses with the yellow above the white, bearish, and that's a bear cross, tons of downside. So that's exactly what we've been seeing, and we're not yet weekly oversold. So all of these factors pointing to more downside. And then also we had a bearish triple thunder crossover where the price lost the 10-week moving average. We had this PAL algo alert. It went off on the week of October 13th. So that was a major sell signal there at 334. And then we dropped to a low of 247. So if you're not utilizing the PAL algo alerts, what are you doing? They're the best thing ever. Actually, we were discussing that in the PAL Group private community yesterday. Michael was saying it's incredible, the hit rate and success rate that it's had. I think it's got to be somewhere around 80 to 85% accuracy. And we're doing our best to do some more tracking as well of those results. But essentially, the bearish triple thunder is whenever you lose the 10-week moving average, the MACD and the stochastic cross bearish. When all three of those happen simultaneously, you get the alerts. Bull side, it's the opposite, right? You're going to get above the 10-week moving average, the stochastic and the MACD cross bullish. That's when we had the last time we had the bull cross and the bullish triple thunder. That was when we were at 267 and we went all the way up to 406. Then, like I said, the bearish triple thunder happened around 333, and then we dropped all the way down to 247. So that was another major red flag. Another red flag here is that we're losing the 50 weekly moving average as support, and now it's acting as resistance. So we could come back down to that 200 weekly there around 218, and then after that it gets pretty ugly, and we're losing all of our daily moving averages as well, which is another red flag. And we could see a bear cross of the 50 and the 100 day moving average, and then the 50 could come down here to the 200 as well, and that would be a death cross, which if that were to occur, that would certainly send us down around $2, 218 to test that 200 weekly moving average. And then if we lose that, like I said, we would have a target of 182 on this weekly bear flag target. So you just take your fib tool. I use log scale as well, so just make sure it's on log scale. And then if you use the fib tool, just double click it on trading view. There'll be links for this in the description as well. This is what I use, and I adjust it for fib scale as well, or sorry, the fib for log scale as well. But then you just take your measured move here from the high to the low, you move it out to your 0.32 fib level, and that gives you your measured move. So the key resistance to break here, it's $2.98, so we'll say $3. Get above $3, that's going to negate this bear flag, and then we're probably heading back up to around 340, 350. If we do not get above $3 and we form a weekly lower high and then lose key support here at 247, that confirms the weekly bear flag, and that would also confirm a weekly downtrend and the EMA 12 and 26 bear cross and weekly oversold more than likely coming. And that would probably put us in weekly oversold if we did confirm this weekly bear flag. So in terms of 247 support, that could be another 26% of downside. So it's not looking great. And on the monthly time frame, another red flag, we could see an EMA 12 and 26 bear cross. We still have this tax loss harvesting. And again, stocks, it's a popularity contest, and MJ is not popular at the moment. We're not really anticipating any major developments or anything like that from a fundamental perspective. We could get rescheduling at any time, but again, I still think that they're going to focus on the crypto legislation here over the coming months, and then once that's done, then they'll really start to focus on MJ policy. But let me know your thoughts and opinions on this in the comment section below. We'll continue the conversation there. It's Rod with the POW Group. Thanks again for joining us on the Pursuit of Wealth, and we'll catch you on the next one.